All right, let's jump straight into one of the absolute most talked about small caps in the market right now. We're looking at KRN Heat Exchanger and Refrigeration. Man, this company has literally captured the market's imagination since its IPO. But we really have to ask, is all this excitement actually justified by the underlying business? Let's find out.
Welcome to Stress-Free Investing Analysis, Personal Notes. I am not a CBI-registered research analyst or investment advisor. Investing in the stock market involves significant risks. The data and charts shown are based on public information and my personal research notes. Please do not treat this as a buy or sell recommendation. Always conduct your own due diligence or consult with a CB-registered professional before making any financial decisions.
Okay, to kick things off, we absolutely have to look at this jaw-dropping metric. KRN has delivered a massive 399% return since its October 2024 IPO low. I mean, that is a five-fold increase in just a remarkably short amount of time. The stock listed at 220 rupees and completely surged past the 1,000 rupee mark. The market is clearly paying up for a very specific narrative here. And in today's explainer, we're going to dissect exactly what's driving this phenomenal enthusiasm.
Here is our roadmap to break down this incredible run and objectively weigh the hype against the actual financial reality. We'll be covering the KRN growth story, the moats and market opportunities, fundamentals versus the valuation reality, key risks and red flags, and then we'll wrap it up with our final verdict and scenarios.
Let's dive right into part 1, the KRN growth story.
So looking at how they make their money, KRN is a totally crucial B2B supplier. They essentially manufacture the literal core of heating and cooling units, the HVAC systems. Condenser coils make up about 55% of their revenue, and evaporator coils pull in another 38%. But the really vital thing to understand here, KRN doesn't sell to you and me. They sell directly to the big original equipment manufacturers, the OEMs. Think industry giants like Daikin, Blue Star, and Voltas. Because these major brands actually don't make these specific components in-house, KRN gets to sit in a highly strategic, incredibly sticky position in the supply chain.
And that brings us to their absolute primary growth engine, a massive 6 times capacity expansion at their new Neemrana plant. The money they raised during their IPO was fully deployed right here. Now, right now, it's only operating at about 20% utilization. But as we know, factories really make their money when they're running at full speed. So their target is to ramp this up to 50% next year, and then hit 80 to 90% by FY29. Management actually estimates that at peak capacity, this company could potentially generate over 2,500 crore rupees in revenue. That's huge.
Moving on to part 2, moats and market opportunities. So what's actually protecting their business? Well, they have a real physical moat through backward integration. That basically means they manufacture their own basic parts, like headers and copper tubes, completely in-house, rather than having to buy them. This gives them a really crucial 3 to 4% cost advantage over competitors. On top of that, just convincing a major brand to use your parts takes about 12 to 18 months of testing, which creates a pretty high barrier to entry. But here is the really exciting part. They are aggressively targeting hyper-growth sectors. Because cooling down hyperscale data centers is massive business right now, they're developing these giant heat exchangers, even targeting the big Google Vizog project. Plus, they're pushing hard into electric bus ACs, and they're aiming to get 50% of their revenue from international exports within just 3 years.
Let's look at part 3, fundamentals versus valuation reality.
The fundamental growth here is undeniably real. I mean, just look at this trajectory. They've achieved a stellar 36% compound annual growth rate in revenue over the last 3 years. Last year alone, revenue hit 600 crores, and their profit after tax jumped almost 45%. Furthermore, we're seeing some really impressive operating leverage. Basically, as their new plant absorbs those fixed costs, their core profit margins have expanded to a very healthy 18.7%. Simply put, the company is delivering exactly what it promised.
But here's the major friction point. The market is currently pricing this stock at a staggering 90 times trailing earnings. Even if we look forward to the really optimistic estimates, it's still trading at around 50 times future earnings. To put that into perspective for you, the broader sector average is sitting right around 30. So the market isn't just paying a premium here. They're pricing this thing like a Ferrari when the rest of the sector is selling at Honda prices.
So we're essentially looking at two contrasting realities. On one hand, KRN is a fundamentally great business. They are virtually debt-free and sitting on over 118 crores in net cash. But on the other hand, that extreme valuation. It's trading at about a 29% premium to its fair intrinsic value of 850 rupees based on future cash flows. At these current levels, the market has already priced in the absolute flawless execution of the new plant, the new data center orders, and the bus AC revenue. It is quite literally priced for perfection.
Which brings us to part 4, key risks and red flags.
This right here is their most glaring structural risk: customer concentration. A massive 33% of their entire revenue relies on just one single customer, Daikin. And if you zoom out a bit, their top 10 customers make up 72% of the pie. What's even more concerning is there are no long-term contracts in place. So, if Daikin were to suddenly change its sourcing strategy, KRN could literally lose a third of its business overnight.
Add to that a few other pretty significant watch items. They rely heavily on imported raw materials, about 78%, which exposes them to foreign exchange and supply risks. We're also seeing a working capital stretch. It's taken them much longer to collect cash, with debtor days jumping sharply to 106. From a governance standpoint, their CFO suddenly resigned in May 2026, less than 20 months post-IPO. The stock has also been slapped with the regulatory friction flag under the NSE surveillance measures due to extreme price volatility. And finally, there's an overhang of a planned 500 crore rupee QIP equity issuance, which is going to dilute existing shareholders' slices of the pie by about 7%. These are serious friction points we just can't ignore.
Finally, let's pull it all together in part 5, final verdict and scenarios.
Based on our strict analytical framework, KRN earns a stress-free score of 62 out of 100. This lands it firmly as a B- grade, making it a strict watchlist candidate for us. It scores exceptionally high on its growth runway and overall financial health, but it gets heavily penalized on that extreme valuation and those structural risk flags. It's a great business, just at the completely wrong price.
When we map out the valuation math, the risk-reward ratio becomes pretty clear. In our base scenario, where everything goes exactly to plan, the target is 1,200 rupees, which is just a very modest 9% upside. But in a bear scenario, where maybe that new Nimrana plant stalls or margins drop, we could see a 36% downside all the way to 700 rupees. The risk simply outweighs the reward right now. This gives us a clear, actionable entry zone. Wait for the hype to cool off and look for a safer entry point between 850 and 1,000 rupees.
Before we wrap up, a quick but important disclaimer. The analysis shared in his explainer is for educational and informational purposes only. I am not a CB-registered research analyst or investment advisor. Investing in the stock market involves significant risks. The data and charts shown are based on public information and my personal research notes. Please do not treat this as a buy or sell recommendation. Always conduct your own due diligence or consult with a CB-registered professional before making any financial decisions. If you found this deep dive helpful and want to stay updated with more stress-free investing analysis, please hit the subscribe button and press the bell icon so you never miss an update. I want to hear from you. Which Indian-listed companies should I analyze next? Drop the stock name in the comments below, and it might be the subject of my next explainer. Thank you for watching and keep your investing stress-free. I'll leave you with this final thought. In a market totally driven by momentum, are you actually buying the business or are you just buying the hype?